Welcome to Tuttle Talk, a part of the Real Estate Radio Network. And now, live in studio, offering you a fresh perspective. He's your local real estate and finance expert. He's part of the Common Sense Party, and he's committed to teaching you how to win in any market. Your host, Andy Tuttle.
Good afternoon and welcome to Tuttle Talk on the Real Estate Radio Network, where we teach you what the rich and the banks do, not what they tell you to do, and where we dispel the misconceptions of financial wellness and the local real estate market and show you how following a few key principles really can free you up to focus on the other important areas of your life, like your friends, your family, and the community. It's the most important hour of radio right here on 660 AM The Answer every Sunday, 3 p.m. I am your host, Andy Tuttle, NMLS number 184325. Been in the business over 12 years now as a mortgage lender. I run a branch of a mortgage company now, and I love what I do. Seeing a lot of people make a lot of mistakes off of misinformation and the talking heads out there, and my goal is to help you understand the importance of building a financial team and understanding the importance of using your mortgage as a financial instrument that can help you create wealth over time, making smart decisions in the real estate market that help you have a prosperous future. That's why I vetted all the expert contributors on this show. That's when we bring the guests we bring on. It is all to empower you every week to make better decisions for you and your family. And I have a much bigger appreciation for that right now because, as you may know, we had a repeat last week because this guy right here is a proud new papa. Applause, please. Yay. Guys, we can have the audio do that. We don't need you, but thank you. I love that. Added to it.
It sounded like a golf gallery.
It was a golf gallery. That's what it was. So, beautiful boy, Andrew Grayson Tuttle. A month early, the first early Tuttle, ladies and James, mostly James. It was he's setting a new trend, but man, I love that kid like so much. It's ridiculous. Take a bullet for him. Get overly defensive for no reason, with no conditions, unless, as I put on my wall, those conditions are poo, peep, eat, sleep, repeat. That is it. And so if those are the conditions, then it's conditional love. Otherwise, it's pretty unconditional. And I love him so much, so happy, but that'll give me a new perspective, I think, on this. And I tell you what, Brian, my show producer here in studio with me, and John Allen, owner of Texas Community Insurance. Welcome to the show, guys.
Thank you, sir.
Thank you. And let me also say congratulations to you and Beth. That is awesome.
Thank you so much. I got, John, you know this as an old man.
It's just going to start early, right? Where's Gabe? Gabe, where are you?
No punching bag. You're here today. It's like you should get a card. They should mail you a card when you become a parent because it is a club. You should get like a club initiation card because I got to tell you, it has been initiation this week for me. No sleep, figuring out what to do. It's just a constant good reminder from God that you just don't. You can say you have a plan, but it doesn't matter with a kid. He totally just blows that right out of the water.
Which is why you don't need a card. You have that look on your face. Everybody that sees you knows that you're a new dad, and you came in here thinking you're going to be done with this in a couple of weeks to get used to it. And I told you, 20 years, right?
20 years,
Psych
baby.
up.
Don't tell Beth. Don't listen to that. Don't you listen to that. 22
years.
Hey, man, we don't have time in this show because it's so packed. But gosh, I'm going to take some time at some point to tell you all about it. I love it. Look at Facebook. I am sorry for all the people that when I see your posts on Facebook about your kids, and I'm like, get over it already. Now I am that guy. So you can get over it. I'll get over it as well. But hope you enjoy that, and thank you so much for listening. Today on the show, we got a lot of stuff, guys. Rates improved this week. We've got an Obamacare expert, Mark Hatcher with Ingenuity HR. He's here. He's going to talk about the implications. We got a lot of questions from you over the week about your concerns of Obamacare, or the Affordable Care Act, as it is known, as well. And we are going to get you some answers to those questions, so stay tuned for that. We also have some horror stories with John Allen, insurance horror stories in the spirit of Halloween. We'll get to some of those and find out how you can make sure that that is not your horror story this Halloween. And then we get with the co-founders of Barefoot Wine. That's Michael Houlihan and Bonnie Harvey. They also wrote a bestseller of the New York Times, The Barefoot Spirit, and they're going to talk about what made that company so great and also about the Millennial Generation. So stay tuned if you're in that generation, or you know that generation is coming up, especially if you're a business owner, because it's a different mentality on how to keep the Millennial Generation engaged, involved, performing at a high level, and these guys know how to do it. We also have Emily here from a PR company. I think it's PR Millennial, correct?
Real News PR.
Real News PR,
yes.
excuse me.
Yes.
Real News, not Millennial. See, that's no sleep. Real News PR, talking about the Millennial Generation in as well. So that's going to be a very interesting and engaging discussion. So if you're a business owner or you're just in that generation and want to find companies that understand how to help you prosper, stay tuned. Right now, let's get into a couple of things. One is QM. So actually, let's go here first. I want to talk about QM, and that's basically the new mortgage regulations that are becoming effective in January. But before I get to that, really quickly on interest rates, is they went up, they improved about 0.25% this week. So if you are in the process of, you were looking for a home and you qualified for a certain amount that met your goals, and now you've got a contract, you may be able to qualify for either a little bit more house, or you just may have improved that payment a little bit and be able to help leverage yourself and reinvest that. So be looking at that right now. If you're already locked into a contract and you're about to close, don't go beat up your lender about that. They're taking insurance out for you, and I got to tell you, if it was the other way, they would never raise your interest rate 3/8, because that happens all the time where you get locked in and then the rates go up 0.5 point. Well, you don't have to share in that loss. You also don't share in the gain unless you work with us. And in that case, we actually renegotiate for you. If it's within a week of closing, a real estate mortgage network, and you've locked in with us and the rates go down 1/4 and it's within a week of closing, we will renegotiate to get you that lower rate. So we can definitely help you with that. If you're with another lender and you're within a week of closing right now, don't beat them up. But ask if they have that. Okay. So, I'm interested in this. That's going to be in our second segment. We're going to talk to the Affordable Care Act. We're going to talk to
Mark Hatcher.
So when we talk to Mark, remind me, I want to tie that into QM, because there's a couple of things that, boy, I'm telling you right now, you got to be careful of with what's happening in mortgage. This is an opportunity to buy now, and I'll give you a little bit of a touch of it right now. With QM, your debt-to-income ratios, you're not going to be able to buy as much house because you're going to have a tighter debt-to-income ratio.
What is QM?
So QM is basically the new regulation that's coming out by HUD, FHA, the CFPB, the Consumer Financial Protection Bureau, that now over the mortgage industry. And it is new regulations and laws and restrictions and guidelines that we all have to follow when approving people for home loans. Okay. And so it right now it's coming out that, one, they want to limit the debt-to-income ratio that a person can have. So in other words, if you could qualify with a 45% debt-to-income ratio before, that may go down to 40 to 43. So that means you can qualify for less house. Okay, so that's your total gross income, what you make versus what your total debt load is, including your mortgage. And so that's getting restricted. Also, there are talks of them increasing down payment requirements for certain income households, lower income households, et cetera. And so some of the things that they say the goal of is to help lower income households, help people struggling. All it's doing is adding regulation and eliminating them from being able to get a loan. Also, they're eliminating certain cost caps, they're enforcing certain cost caps, a 3% cap on all closing costs. And so what that does to a lender is on those $100,000 loans, well, your title costs and your basic lender costs, no gouging, nothing, is going to be over 3%. And so they have to increase the rate on those people to cover those costs, or they just can't do those loans because of all the other restrictions on them. So the person that you're trying to help is not getting helped, and they're not going to be able to get help. And it's doing the exact opposite. And I don't know if that's the same with Obamacare. I've heard a lot of stuff on both sides. I'm excited to talk to this expert today because we all know about the total debacle on the internet with them, right? 1 out of 10 can log on and go through the process. 1 out of 10 right now. And that's it was a liberal news station that said that. Heck, I heard that on the Colbert Report. That's what was cracking me up. And Daily Show, when I hear it though, and they're busting on it, I know it's true on that. And so there's been a lot of trouble, but we're going to talk about some of the other meaningful things that are there. Is it doing what it's saying, or hopefully it's not this? It seems like it to me, my gosh, that it's going to be yet another thing where it's a great idea, but it's not going to work. You know what I mean? And that's what's happening on my side, on the mortgage side, right? For you. They want to help you, but right now it's doing everything but. So those are the fun things we're going to talk about in the next segment. Right now, John Allen, let's talk a little bit about some horror stories in the insurance business. Let's get some Halloween music, please. Okay, that's a good setup. Very good setup. All right, now that you've got that, John, give us your best horror story.
Well, I preach on here about how important it is to get the right coverage. So, here's a real simple example of what happens, of why you want to make sure you have the right coverage. We have a client who about 2 months ago had a leak on the little line that runs from the toilet into the wall. Now, the little line that runs from the toilet into the wall?
Yeah, those little silver lines.
Maybe a little drip, maybe He was out one day. He was out one day, and he gets a panic call from his wife. I can't turn the water off in the house. She didn't sound like that, but that was kind of the urgency in the voice, right? He gets home, and literally every room except for one had water damage, major water damage, meaning this happened on the second floor, and on the first floor, there's water coming through the light fixtures. There's drywall peeling off the ceiling. It was a $120,000 claim.
Oh, my gosh.
$120,000 from a little water line drip, drip, drip.
That's a new house.
Do most policies cover that? Yes, but you need to make sure. That's a little bit of a dramatic example. That stuff really happens. If I sit here and I tell you, well, it could happen, you'd look at me like I got two heads, but it really does. 3 or 4 times a year, we have somebody that has an issue like that. Maybe not the toilet line, but something like that. And it just seems like it's ridiculous, but it happens and you're out big dollars. Right?
So, okay. So then is there a possibility that you're not covered for that? I mean, is that something people should really check for?
Depends on the kind of policy you get. There are companies that offer some real minimalist
cut rate policies because it's all about the money.
Maybe it's ACV, maybe certain
actual
types
cash
of,
value.
Right. Sorry. Yeah, the actual cash value. Exactly. But you just have to make sure you're covered for the basics. Just look and make sure you talk to somebody who knows.
All right.
That's all. So I'd like to throw it out there. Has anybody else heard some other good horror stories? Oh, I can't believe the following happened. I'd love to share that on the air, guys.
Okay. So if that's the case, I like that. So one, get your insurance checked. If you're not sure, ask your local carrier. If you want a second opinion on something, I'm telling you, talk to John Allen first. He works with our clients. He does my own personal insurance. He's a great guy, honest, has been in the business a long time, and most importantly, he knows how to help you stay competitive, but protect you from horror stories like this. And that's what's so critical, especially, my gosh, I have a baby now. The last thing I'd want is save a few bucks a month to have a $120,000 claim later when I got a family and figure that out. That's not going to be fun.
You're going to have different kinds of leaks to contend with, but that's a whole other show.
Jeez, but okay, so good news there. Here's what I want you to do. If you have your own horror story, go to facebook.com/Tuttle Talk and share it there, or you can email me, answers@andytuttle.com, answers@andytuttle.com. Give us your story, and we will read one of those stories every week on the show here for the next month through the Halloween season and beyond. So that'll be fun. Do that. Remember, you can always call us at 469-319-0660, 469-319-0660. We're here to help answer your questions, connect you to the right professional. And obviously, if you are this QM deal, if that kind of makes you go, what, next year I may be able to afford a less house, then call us there. We want to help you figure out how to get into a home now that makes sense for you and your family, and we can help you with that. Coming up, we're going to talk to Obamacare or Affordable Care Act expert Mark Hatcher with Ingenuity HR and ask him all the questions you had this week, and then we're going to get with the co-founders of Barefoot Wine and talk to them about how to engage with the Millennial Generation in a powerful way that helps prosper them, your company, and our country. So stay with us. Welcome back. You're listening to Tuttle Talk here on 660 AM The Answer. Thank you so much for staying with us. I am your host, Andy Tuttle, and now we have on the phone with us, you have asked, we are delivering here, Mark Hatcher, President and CEO of Ingenuity HR. This guy has been, it's an HR outsourcing company, and he has been at the forefront of everything HR. That includes healthcare, benefits, those kinds of things. So he is entrenched in this. He has been working in it and knows all the inside and out stuff that you and I just don't have the time to dig into. And he's here with us today. Mark, welcome to the show.
Hey, thank you.
You bet. Thank you. And I know you've been you've been on Fox about this. You've been talking about this. I know to your team, of course, you work with companies all over the area. You're here in Dallas, correct?
Yes, I am.
And so you've got some answers, I hope, for us today, because we reached out to our audience this past week and just asked them to ask us some of the questions, some of the things they're concerned about. So I am just going to kind of on the fly here throw some grenades at you and see how you take them, okay?
Let's go.
All right, we'll start with some easy ones, I think. I love this. I love our listeners. So Teresa from Dallas asks, this is a basic one, how and why are we getting taxed on benefits?
Well, here's the thing. If you're still in your employer plan, the premiums that you're paying, your portion of the premiums are being pre-taxed. The only way that that's not going to happen is if you are going out and purchasing your insurance from the government exchange, which is the one Texas has at healthcare.gov. But more than likely, unless your income level is at the point where you're going to receive a subsidy, there's no reason to go to the exchange. You're just going to stay in your employer plan. And so with that, I mean, to say just a little bit more on that is the other thing about it, too, and for Teresa, is that her contribution under her employer plan is more than 9.5% of her income, then it does allow her to go out to the exchange and see if she can save some money there. Or if the employer plan does not meet the minimum value coverage, which is the term, which basically means it doesn't have the coverages that are required by the law, then she has the right to go out there as well. So if she goes that route, yeah, she's going to have to pay for her premiums with after-tax dollars, but keep in mind, more than likely her premium is going to be way less than what she's paying now, which offsets any tax savings she had anyway.
Okay, so then when you say, because that's one of the questions too, when you talk about the employer maybe not meeting the minimum standards, but the employer can get fined on that, and that kind of goes to the next question, is that, and actually from Teresa as well, is are employers being negatively impacted from this or positively? How does it affect the employers?
Well, it's affecting them in two ways. First, you got to remember that the large employer mandate has been pushed back to January 1st, 2015. The only mandate that's being pushed through right now is the individual mandate. So employers under 50 employees are not subjected in the future to the fine of $2,000 or $3,000 is what she's referencing. That's
Gotcha.
Not going to be impacted until next year. And then, there's going to be, who knows what kind of changes by then. So I tell all my employer clients, just hold off on that. But if you're a small employer, under 50 employees, you got to keep in mind that the SHOP, the Small Health Options Program under the exchange, which the provider is Blue Cross, there's an option for the small group employers to go purchase their insurance through the exchange and in 2014 receive up to 50% tax credit for the employer's portion of the premium.
So, okay. So then you can find out more information about that, I would assume, at healthcare.gov, correct?
Yeah, you can. Yeah,
can they go to your website? Do you have a website?
Yeah, you can come to our website. It's going to be much easier. Ingenuity, and it's spelled with an E, ENGINUITYHR.com. And there you're going to be able to get through and get some information as far as an employer or an individual as to, do I potentially get a subsidy and so forth. I mean, we can't quote the groups out of the exchange or the individuals from the exchange, and that's we'll have to direct them there. But at least I can get some basic answers. I
love it. So, okay, if you want to go to ingenuityhr.com, that we will post that on facebook.com /Tuttle Talk. So go to our Facebook page and you can find that link there as well. Okay, in our last couple of minutes, I'm going to ask you a few questions. We'll just try to go as brief answers as possible. I know that's difficult on a weighty subject, but on the topic about it's going to the individual and making it more affordable, well, Stacy from Southlake asks, what do they consider affordable health care? Because, and I've heard a lot from this from a lot of people, they're concerned that premiums and deductibles are higher with this, as well as max out-of-pocket expenses. Who's getting the affordable part of this health care program they speak of? So would you speak to that?
Yeah, the affordable part's a real interesting part because, coming up January 1, we have guaranteed issue, no more pre-existing conditions. So as of January 1, if you haven't been able to get coverage because you declined on an individual basis, it opens up the market. Now, to answer her question real briefly, there's going to be people that the premiums are going to be higher and the benefits are going to be worse. And for some people, based on their income, the premiums could be substantially lower. So it's really just based on your individual status or your family status and your dependence on what your premium is going to look like.
Yeah, I know I know, of course, time will tell. And Mark, if you're open for it, I'd love to have you back over the next few months to kind of continue this dialogue.
Yeah, you probably have me back sooner than that with all the stuff going on with the healthcare.
No, I mean like multiple times over the next few months.
Yeah, no, don't worry. The story keeps unfolding. I didn't think we'd be talking about the crash of the website, but here we are.
I noticed that. Yeah, exactly. That's what I was going to bring up. It's like, no matter how good something is, if you can't use it, and I hear that it's like 1 in 10 people are able to get on, and there's a lot of problems with that. What do you think of that? And we really got about a minute and a half here left. What do you think of that? And do you think they're going to fix it anytime soon?
Well, I've done about 30 Fox News and local television interviews over the last 2 days, and it's just the whole subject's been exactly what you just asked.
Yep.
this website's a mess, and whether they're going to be able to get it corrected or not is a whole different scenario. But the net effect is I was on it 5 times yesterday trying to log in, put my first name, last name, email address, username, password, set up 3 security questions. It came back to me, and you know what it said to me? Yeah. He goes, we can't set you up at this time because your first name, last name, and email address are not unique.
Huh. Whoa, that is so weird. Brian,
just imagine what's going on.
Oh, man, no kidding. I think Brian Moore, our show producer here, is the only guy that's been able to actually successfully log on.
Yeah, I signed on. I didn't have a problem logging in. And actually, when I called the phone number, it was like 6:30, 7 o'clock in the evening. I was on hold 30 seconds.
Wow.
What? Wow.
Yeah. This is the guy. He's the guy you got to talk to. He's got the magic touch.
Yeah. I might send all my clients and them to call you to get them on.
Yeah, absolutely. Deal. Done. So, Mark, final question. We've got to go, but I want to ask you just what do you think, briefly, overall, is Obamacare good for us based on your understanding of it?
It's real simple. If the young people, healthy people don't get in and participate, it's going to be a disaster. Premiums will be 300%, 400%, 500% more than what they are now next year. If they get the young people in, it has a chance to work. But other than that, no young people, no healthy people paying into the system, it's going to be a complete failure.
Mark Hatcher here on Tuttle Talk. He's with Ingenuity HR, the president and CEO. Fantastic answers today. Thank you so much for your time. If you want to get more information in makes sense layman terms, go to ingenuityhr.com with an E at the front, or go to facebook.com/Tuttle Talk, and we'll get you the information there. Mark, thanks so much for joining us.
You bet. Thank you.
All right. Coming up, we are going to get with the co-founders of Barefoot Wine, Michael Houlihan and Bonnie Harvey, talk about their book, what made them successful, and some great key takeaways to show you, the Millennial Generation, how you can be successful too. Welcome back. You are listening to Tuttle Talk. I am your host, Andy Tuttle. Thank you so much for staying with us. Man, I'm excited about this segment. We have with us here in studio the co-founders of Barefoot Wine and the authors of the new book, The Barefoot Spirit, a bestseller, New York Times bestseller. Thank you very much. Michael Houlihan and Bonnie Harvey, thank you so much for joining us today.
Oh, it's our pleasure, Andy. Thank you for inviting us.
Oh, you bet. This is going to be great. So what I'm excited about, one, is your story, and we'll get into that in a minute. Two, your passion for the Millennial Generation. And we actually have Emily from Real News PR coming up in the next segment, and we're going to get into a little panel discussion about how to empower, how to help Millennial generations prosper, how to communicate to them, right? Because it's a different way than generations in the past. And we've got to talk the language, right? And I think you guys are doing that obviously better than anyone. Michael, you start. I really want to hear. So apparently you've been traveling a lot, speaking to a lot of universities, and you're about to go to Chicago to talk at the CEO, Collegiate Entrepreneurs Organization, correct?
That's correct. Bonnie and I are the keynote speakers for this year's CEO convention up there. They get about 1,400 young people. These are college kids. They've already got their own businesses before they even graduated. There's 4,700 of them across the United States, and 33 or 40 schools. They're studying entrepreneurship. They're practicing entrepreneurship. This is an amazing generation. These kids are doing something that really hasn't been done before, and they're organized.
Yeah, apparently, especially if they've already got businesses in college, they're getting it. Now, real quickly, what do you think? How are they doing that in your mind? Obviously, you wrote a book, and you guys are communicating to this generation. How are they getting this so quickly? How are they starting businesses so early?
Well, this generation has more access to information than anyone else so far. They also have better education. And they also are faced with quite a stark reality, which is that sometimes self-employment is the only form of employment. And so these people are the cream of the crop of this generation, and they're saying, maybe I'm not going to get a job. I don't see the other grads getting one. Maybe I should get serious and start my own business right now. So they're very courageous young people. We're inspired. We go to inspire them. They inspire us.
That's awesome because, the thing is, too, what I love about that is sometimes the lack of the truth will set you free. In other words, because they don't know that they can fail and it can hurt and it can crush them. They don't care. It's not in their brain. It's just, no, this is going to happen, right? Is that what you're seeing?
Oh, exactly. That's what we're seeing. And what's interesting is that's the experience that we had when we started Barefoot Wines. We had no knowledge of the industry and we had no money. So we really have that in common with the students that we're talking to now at the various universities. And they appreciate that a lot.
Right. And when you say various universities, that's not just Chicago that you're going to. Tell us a little bit about all the travels that you've been doing.
2 weeks ago, we just got back from Florida. We spoke to 4 universities there, the students of entrepreneurship, and oftentimes there were students that were marketing and took entrepreneur as a secondary course. And then we went into Georgia and spoke to Columbus University. And we always tell the students of our experience to kind of encourage them, to let them know that maybe some of their best assets are not knowing what they were doing to start with and not having funds. If you don't have funds, you're going to be creative. You're going to be innovative. You're going to come up with a new idea. And you don't have the problem of throwing money at your situation, which isn't always something that's going to solve what you're looking for.
And what I love about that is you don't speak of this glib. You don't speak to this outside of what's going on. You have personal experience with it. In fact, that's how you started Barefoot Wine, correct?
Exactly. That's exactly how we started in our laundry room. And our first table, our first desk was a door that we found in the barn out back and cleaned it off and put it on 2 sawhorses. So we know what it's like to start with nothing. And a lot of these students have that same concern. So we encourage them.
So in that, Michael, going back to your story, obviously you're encouraging these kids today, which I just have to say how much I love because it doesn't get taught in our education going up. The financial advice and how to become an entrepreneur is not part of the curriculum necessarily. It's the financial advice is balancing a checkbook, et cetera, and those kinds of basics. But talking about how to be wealthy and how to understand that part of things and really get that business entrepreneur out of you doesn't necessarily happen all the time. But you guys had that. You're giving it now to these young kids. How did you and Barefoot Wine, starting in your own laundry room with no advertising, no money to speak of, how did you build that to become and build such a brand for yourself?
Well, this is why we wrote the book. And the book is all the stories that really led up to the building of this great American brand. And they are surprising stories. These are things that when you read, you say, oh, I can see how that could happen. But the main thing that happened to us is we didn't give up. We really believed in what we were doing. We thought this is going to be a success. And like you said earlier, we didn't know enough to know we couldn't do it. And that's the good news. The other thing is we weren't from the industry. And because we weren't, we revolutionized the industry. Being an outsider gives you a clean mind. You go into it with a clean chalkboard and you make your own marks. And so we encourage young people to do that, to cut the pie their way, to define it their way, to develop their own niche and their own market. And that's the kind of thing we did with Barefoot Wine. For instance, Barefoot Wine was really the first non-vintage wine that was nationally popular. All the other wines had vintage dates on them. And the reason we did that is because we realized that our buyer was a 30-year-old female shopping with 2 kids, generally in a supermarket, looking for wine that was like grocery wine. And so she wanted wine that tastes the same from year to year. Well, in order to do that, we blended different vintages to get a consistent flavor profile. Well, nobody had ever done that before. And even though it was wildly successful, it took us like 6 or 7 years of going through that kind of missionary period where we had to convince the gatekeepers that it would sell.
You're listening to Tuttle Talk on the Real Estate Radio Network here on 660 AM. The Answer. Michael, we're talking with Michael and Bonnie, from the co-founders of Barefoot Wine and the author of the new book, The Barefoot Wine, The Barefoot Spirit, New York Times bestseller. Michael, how did you stay afloat for 6-7 years while you were doing that?
Bailed water, prayed. What we did is we found that by developing strategic partnerships, you know, they say, if you want to learn to dance, just have somebody shooting at your boots and you'll learn how to dance fast. Well, the same thing happens in business. Your bills are due, but you don't have the money. So you have to become creative. You have to become resourceful and imaginative. And so we realized that we could use both our suppliers and our customers as bankers. And the way we used our suppliers as bankers is we went to the suppliers who stand to gain the most if we gained. We call this a strategic alliance. Who gains if you gain? If your business is a success, who else's business is a success? In our case, it was the glass company, because we're selling inexpensive wine. They're going to sell a ton of glass to us, more than they would to, say, a $50 bottle of wine. A $5 bottle of wine, you got to sell a couple 100,000 cases just to break even, and that's glass for them. It's also corks, it's foils, it's labels, it's cardboard, it's every part of that package. So we went to those people and we said, we want to grow big. We need your help. If we grow big, we'll buy more of your products. So would you extend our credit? Would you extend our terms? But we treated them right. When we couldn't pay our bill, we went to them in advance and we told them we couldn't pay the bill. So they didn't think that we were flex. They knew that we weren't going to run and hide. They thought that we were not going to go dark and be a bag pay. They knew that we had their concern at heart and we had empathy. So when it was time for us to expand, they agreed to do so. On the other hand, what we found was that when we offered discounts for quantity purchases to our customers who are buying from us, what we did was we discounted the product. That got more out there. They sold it faster. So here we were getting financed by our suppliers and by our customers.
That is in the book. Those strategies and more. Yeah. That kind of content, guys. That's just a snippet, really, of what you get in the book. If you want that kind of content, if you need that, I'm telling you, when I hear this, I'm like, man, it's every business. Every business. It's about strategic partnerships. How do you leverage? How do you help? How do you become the biggest giver and then leverage that to help you grow your business the right way? You guys done that. If you want to get a copy of the book, it's called The Barefoot Spirit. One, I know you can go to barefootwinefounders.com and subscribe to the blog there, correct?
Yes.
And those are short. There's not like a 10,000 word blog they got to read.
No.
Right.
600 words.
Small,
every week.
Bite-sized bits of entrepreneurial information to help them be successful, yes?
Absolutely.
And they can find the book there too, correct?
Absolutely.
Guys, The Barefoot Wine Spirit. Bonnie, I have one more question to you before we go to break. Before we get into, in the next segment, millennial discussion, because that's what I really want to turn this to, because I know, Michael, we were talking before the show, this book was written for the millennial generation, correct?
Absolutely. It was written for them.
Yes, and so we're going to get into how and what that means. But, Bonnie, in this book, what other key takeaways would you say are in this book that people pick it up, if they want to go pick up a book like this, who is the people that needs to get this book?
Anybody that's got a small business or anybody that's thinking about starting a business, because what we experience is what most anybody that's starting a business will experience. It's a lot of surprises, and the book is full of stories. It's not prescriptive text. It's really fun to read. One of the things that we talk about is the mistakes we made. And it seems that a lot of people that are successful don't talk about the mistakes they made. And I think that in itself is a mistake. So we talk about how to make mistakes right. And there's a big chapter on that in the book. And it's not just RIGHT, but it's WRITE. You make a mistake, there's some kind of a document or maybe a contract or a checklist. Something has to be changed. And if you admit to your mistake right off, discuss it, figure out how it happened and how not to do it again, then you've really got a good mistake there. You're making it right.
You're failing forward, as they say, right?
Yes.
And that is the way to do it. Guys, you're listening to Tuttle Talk. We're talking with Michael Houlihan and Bonnie Harvey, co-founders of Barefoot Wine. I know you've seen it in the stores everywhere you go. The book is The Barefoot Spirit. Coming up, we're going to stay with you guys. You're going to stay here for another segment, yes?
Yes, we'll stick around.
Good, and we are going to continue the conversation here and bring in Emily with Real News PR, and we're going to really talk about the millennial generation and how to communicate with them and how this book, who was written for them to empower you guys out there, to empower millennials, how it's written for you, how to empower you, how you can grow in this market, and how to make sure that you're matched up for success in the next decade and beyond. So stay with us. And we're back. Welcome back to Tuttle Talk here on the Real Estate Radio Network. Thank you so much for joining us. If you've stayed tuned, you know we're talking with Michael Houlihan and Bonnie Harvey, co-founders of Barefoot Wine and co-authors of the new book, The Barefoot Spirit, New York Times Bestseller, helping change lives in the millennial generation all over the nation. They're doing tours, keynote speaking at colleges, really helping you to succeed and understand this market and how your entrepreneurial spirit can thrive and give it legs and give weight to it. And now we're joined by Emily Guerra of Real News PR, who is in the Millennial Generation. Emily, welcome to the show.
Hello. Thanks for having me.
She's going to give us some perspective from actually the millennials' point of view and how all that works and the perception of it. So I got to start with this, going back to the Millennial Generation. And Bonnie, in all your talks, in all everything you guys are touring universities, you're keynote speaking everywhere, what is the major concern or the main question that you get from the kids and the young people that you're talking to today?
Well, one thing that we've heard over and over again is what keeps you going? Michael and I struggled a lot, and it was very difficult, and we tell the kids these stories, and they say, well, what kept you going? What inspired you? And so much of the time, it was other people and the fact that they loved what we were doing. We did a lot of tastings at fundraisers and community events, and the people would come up and say, I love this wine, I love the package, I love the price, and I just hope that you guys keep doing it. So that was encouraging, but it's also working as a couple, because Michael and I have different talents, different skills, and it was really fun working as a couple. And we couldn't both be down at the same time. That didn't work. So one of us always had to be up, so we could always rely on the other person.
So part of that message would be, don't feel like you have to go it alone?
Absolutely. You can't go it alone. I'm the kind of a swashbuckling kind of guy, and she's kind of the back office kind of a person. So she keeps me from tripping on my shoelaces while I'm wielding the sword.
So, Emily, do you feel that you or people in your age range in this generation feel more that they feel more a need to be independent versus interdependent, or do you think there's a shift happening? What's going on there?
You know, I think it's kind of half and half. I feel like there is that group of people who want to be independent and do work on their own. But I also feel like people our age are very social and, you know, they're constantly communicating, whether that be virtually or in person. And I think having a group of people work around you really keeps a positive attitude around the work life. I know just having my coworkers around me constantly saying comments, you know, you're doing a great job. We're really proud of you. Really keeps me going. If I were just to sit in my room all day and work on my projects, I would probably get a little depressed and wonder if I'm doing a good job. So I think having that environment around you really keeps you going. You know, most people aren't very happy if you're by yourself.
Right. Do you feel that employers get that right now, or are the employers that get that doing better because they understand the millennial generation? Because that's the biggest generation of homebuyers coming up. It's the biggest generation of our workforce coming up. I mean, that's what's happening right now. Is the workforce understanding that?
I think yes and no. I feel like sometimes employers, whenever there's a student coming right out of college, they're giving, you know, you might call it grunt work, and they might just say, do this assignment, get it done, but there's never really any gratitude and saying, you know, you did a great job. Thank you so much for helping me. Mm-hmm. But whenever my boss comes up to me at work and, you know, I haven't even done anything specifically that day, but he says, you know, you've done a really good job lately. And, you know, I'm really impressed with you. I'm so proud of you. That's what keeps me going. And it makes
Brian,
me want to stay there.
A really great job. I just wanted to say, Brian, that you do a great job.
Thank you for that recognition. I appreciate that.
Oh, wow. That's right. I just thought of it myself. It's because I care.
It's amazing.
Oh, yes. Oh, thank you, Emily. I'm sorry. Were you speaking? You didn't hear. I didn't hear anything. So, Michael, do you feel right now with the millennial generation, is that what they need? What are some of the things that you see that's different about this generation from past generations?
Well, this generation grew up with the technology that we gave them, and they mastered it. They've always been in contact with their friends and their tribe and their family. This generation definitely looks for validation, not just virtually, but in fact. And what we did in our business, and I recommend this to people to do today, is write it. Write down a nice memo. You know, Emily, you did a great job on this project, and then copy it to everybody in the office. Two things happen. One, Emily knows that she's appreciated, and the people in the office know what Emily does. And that's really important.
The people don't always know that. It's so true.
Especially when you're trying to blend generations, especially when you've got some boomers sitting over there in an office, and then you got some millennials sitting around a dining room table working in a group, a whole different work style, but they need to know what each other are doing.
Absolutely.
I also think it's really fun whenever you have bosses and other people you're working with, let the younger generation teach the people who have been there for a while things. You know, at an internship I was at, we helped all the people who have been there for a while learn how to make a Twitter account. You know, some people, for me, that's second nature. I'm like, you don't know how to make a Twitter account? But for some people, they don't know how. And that's kind of important when you're trying to do stuff in the PR world. And
how do you twit? Are you a twit?
Yeah, exactly. You don't even know what the word is.
It's a great way to build relationships, is by seeing what the other person has that you need. And also, like Michael was saying, see how the team works together to accomplish a goal. That can really only be done if the person who's employing them, their manager or whatever, makes it very clear what the company's goal is and what the project needs from each individual and how they all fit together like a team. And then they can have a better feeling of success because they know they're moving towards this goal.
You're listening to Tuttle Talk here on the Real Estate Radio Network. We're speaking with Michael Houlihan and Bonnie Harvey, co-founders of Barefoot Wine and authors of the book The Barefoot Spirit, New York Times bestseller. And then also, Emily Guerra has joined us from Real News PR to talk about the Millennial Generation. Guys, the solution here, read the book, Barefoot Spirit. That is going to help you get to where you want to go. And it sounds to me that it's not just for the millennial generation. It's for anyone communicating, which means employers to the millennial generation. And Michael, in our last minute together here, I want to ask you, what would you leave our listeners with today as a tip or two, as you would say, maybe a key to success? You know, you give those on your blog. What type of keys to success would you say a millennial should embrace?
Well, I think they should not be afraid to ask questions. And they should not be held back because they're underfinanced or they don't have enough knowledge. I think that they will find that when they ask questions, they get answers. And make friends in low places. And I don't mean that in a disparaging way. I mean people who've got dirt under their fingernails, people who are running forklifts or people who are working in warehouses, people that touch any part of what you or your company is doing. Talk to them. You're going to get some insights that you would not normally get. That's what helped us.
I think that's fantastic advice. If you want more of that, pick up the book, The Barefoot Spirit. I'm sure you can go to Amazon.com, but more importantly, go to barefootwinefounders.com, subscribe to the blog there, and get fed all the time, and then pick up the book there. You can also go to facebook.com/Tuttle Talk and find the link to the book and the audio recording of this today there, and also at andytuttle.com. Thank you, Michael. Thank you, Bonnie, so much for being here today.
Thanks for having us, Andy. It's been a blast.
Yeah, it was quick. Went by quick. Emily, thank you as well.
Thanks so much for having me.
All right, that's it for this hour. We are done, but I hope you've enjoyed it and got some good nuggets out of it. I'd like to thank all my guests, my expert contributors, Dan Bradford, our production director, and the whole family here at 660 AM The Answer. That's it for today. Thank you for tuning in to Tuttle Talk, where we're making financial intelligence a priority in the community. Have a great weekend.
You've been listening to Tuttle Talk on 660 AM The Answer. You can reach Andy at 214-736-9696. That's 214-736-9696. Or email him, questions@andytuttle.com. Don't forget to become a fan of his show by going to facebook.com/Tuttle Talk. You can also catch previous shows by going to andytuttle.com.